Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for June the 2nd, 2011. Now we're having a very difficult trading week. We have a lot of issues on the table here. We have the non-farm payrolls coming out on Friday. The ADP report came out today, very poor numbers. Euro debt crisis accelerating. So again, a very, very difficult trading week. So what I'm looking at here now, the iShares Comex Gold Trust, the IAU, excuse me. I'd like exposure to gold, but I don't want to go into the spot market. I want something a little slower moving here because we're going to see increased volatility. Now, looking at the iShares, we have the key levels 1482, 1491, and 1499 with a close of 1502. Now, this is going to be a way of buying gold, but in a very slower moving vehicle. Now, if I get into the spot gold market, it's moving all over the place. I'm not really sure that this is a good week to be doing that. So the IAU is a very good alternative to that. Now, again, our long-term crossover, our triple EMA crossover, has crossed the trigger here just above the 1460 area, a fresh buy signal, so I like that. Predicted short, medium, and long-term differences all above the zero line. And again, our predicted MACD and our predicted true strength indicator have crossed the trigger to the upside. So everything looks good here for the IAU to move higher. Now what we want to do is when we're looking to buy this, we're going to now fine tune our entry point. We're going to go into the predicted high and predicted low from Vantage Point in Vantage Point's daily report to assist us with that. Now for tomorrow, we can see we have the predicted low at 1497 and the predicted high at 1504. Now that's a very, very tight range, not a lot of movement here, but again, when we're dealing with a non-farm payroll coming out on Friday, we don't want to get too aggressive going into the spot market or even into the futures market for that matter. So for tomorrow, we're going to be looking at 1497, the initial move to 1504. Now, if we go back into our charts here, my opinion is that if gold is a safe haven flow, it's going to pour into that. Recently, we've hit the 1540 mark in the IAU, and I think we're going to move back up towards that area sooner rather than later. So your day traders, you're going to be looking at 1504, 1510, somewhere in that area. But your medium to longer term traders, we should be looking at a move of 1540 or higher on this particular ETF. And again, it's a very attractive ETF because we can have our stops relatively tight. On this particular one, I would have my stop here at about 1440. So we're only looking at about a 40-cent stop loss. Very, very reasonable, slow moving, nothing too aggressive. And then once the non-farm payroll passes, we can look further into this. So that's our first position for tonight. Now our second position for tonight is going to be in the Forex market, specifically the dollar-yen currency pair. We're trading US-Canada today. My opinion on US-Canada is we're still going to likely move lower, but we're going to have increased volatility with the non-farm payroll. So on this particular pair, the dollar-yen, currently we're pretty much trading flat. Now we have good support on the dollar-yen down around the 80 level. We have multilateral intervention. We have a number of different things that are going to keep the dollar-yen above the 80 level in my respectful opinion. So we're going to use any dip lower here as a buying opportunity. Now the Vantage Point, we're running flat on our MACD. Our predicted true strength indicator is running somewhat flat also. Our predicted short, medium, and long-term differences are still hugging around that zero line, and our triple EMA cross is pretty much flat. So this is going to be essentially an intraday day trade. Now going into the daily report from Vantage Point, we can see that Vantage Point is forecasting for tomorrow in the 80.42 level, the high of 81.36. So respecting the fact of the conditions in Japan right now, my bias is if the yen is strengthening and the dollar is strengthening, the dollar is going to win that. The US dollar is going to win that battle. So on a move towards 80.42 tonight, we're going to be looking to set our long positions. Now again, we would like to see a move back towards the 81.36 level. So in this particular case, I would be looking at a stop somewhere in the area of about 79.40, allowing for about 100 pips of volatility. Now again, going back into our charts using the Vantage Point software, we have a number of different indicators we can apply here to see what's going to happen. we can see that we have 81.34, 81.24, 81.07 with a close of 80.95. Not overly bullish, so we know that we pretty much can assess here that it's moving lower, but when it does move lower, we want to use that as a buying opportunity. Now, using the Vantage Point predicted high-low break, we can see that the bias still remains to the top side. In the last couple of weeks of trading, the high-low break has been to the top side, not the downside. Very important to remember that. So for tomorrow, we're going to be looking for a pullback towards that 80.42 level, getting into our buy positions, and then looking for a move back towards the 81.36 level. Now we're gonna have a very, very volatile finish to the week, and my recommendation to most of the guys on Trader Planet here is to really limit your trade here this week, because our commodities are all over the place. Our equities they're up one day and then crashing 30 points the next day. So be very, very cautious in your trade up to and including Friday of this week, and then next week we're going to get into some good trending markets. So with that said, my name is Greg Furman, market analyst here at TraderPlanet, TraderPlanet.com, and these are the market positions for June the 2nd, 2020.